What's going on, guys, and welcome back to another video. So in today's video, I want to talk about what the Fed just said in their weekly minutes, but also I want to address why the US national deficit is a huge concern. Again, these are major problems, and I'm not trying to scare you. I'm not trying to provide fear and gloom and doom. I'm not trying to do any of that. But what I am trying to tell you is the world isn't ending. This doesn't mean that the entire human population is screwed, but what this does mean is that now more than ever, you should be well aware of what's going on. And I want to provide the facts and tell you what the Fed just said today. And again, all I ask is if you can spend 2 seconds, go ahead, hit that like button, and let's continue. Now, first I want to talk about what the Federal Reserve said today. Then, at the end of this video, I want to explain why our national deficit is a huge concern now that the Fed is raising rates. And this is a real concern. And it's a concern amongst many economists because for every point that the Fed raises the federal funds rate, this increases the cost of our national deficit. And right now, sitting at $31 trillion, honestly, it wouldn't take much before our national deficit costs more than we can afford. And I'll just throw out some simple math for a second, and then I'll explain more in a minute. But for simple math's sake, again, I'm not a mathematician, but for every 1% our interest goes up, it increases our interest payments on this $31 trillion national deficit by $310 billion. Think about that, because that's insane. Now, let's talk about this. The Fed stated that raising interest rates by 75 basis points would be a rather rare occurrence. That was what they said. So what they said a month ago. However, in their minutes, they specifically stated that there is, according to them, a considerable probability of a 75 basis point rate hike in June and July. And honestly, the market is pricing in this already. And that's a huge concern. Something else that the Fed stated is that they indicated expectations that inflation would decline notably in coming quarters. They didn't actually say which quarters, they didn't specify by how much, but they are expecting inflation to come down. Well, here's the reason why it's coming down. We are raising rates. We are seeing demand destruction. Gas prices are coming down. We see home prices. They're still somewhat going up, but we are seeing a slow in sales. That's good news. That's going to bring home prices back down. The only problem is shelter in the CPI report, it actually equates to about the 33% of the weight of the entire report. Here's the problem. As home prices stay somewhat high, as rates are around 6%, people aren't really out there buying homes, but they still need a place to live. So what do? They go and rent someplace. Here's the problem. As there's more demand for an apartment and for rental units, guess what? The prices go up. And that's what's difficult. Now, the crazy part about the entire Fed minutes release is that they didn't say a single time, anywhere in the minutes, they didn't reference the word recession. Not one time. They did talk about inflation almost 100 times. And they continue to feed us lies right now through, and honestly, I don't know why they continue to tell us these lies, even though we are seeing from some Fed presidents that they are publicly saying something completely different. Now, and I'm going to talk about this in just a minute and I've addressed this the other day, that the Federal Reserve out of Atlanta, they're telling us, and it's almost a clear sign that yes, we are in a recession. It's happening now. We don't need to wait. It's already going on. But again, we'll see what happens. We'll see if the Fed decides to tell us the truth or if they continue to beat around the bush and tell us just the things that they hope will make us happy for at least a little bit. But another worry, and let me know if you are doing this as well, but another worry is that credit card balances at commercial banks actually rose at the fastest rate in decades. And again, let me know, are you seeing that your credit card balances are going up? One of the things that I've seen is I continue to buy the same stuff on my credit cards, and I pay them off at the end of every month, here's the difference. My credit card balance that I pay off, which is normally almost the same throughout the entire year, it's actually going up. So every time I go and pay it off, I'm paying a little bit more, which means the products that I'm buying, the services that I'm utilizing, they are costing more money. Now, it's not something I really paid much attention to until just recently, but again, that's scary. It's very scary. Now, one of the reasons why this is, and I think this is scary not just for myself, but for other people as well, is because we are in a time of uncertainty. We're in a time where we don't know who's going to get laid off. We don't know which businesses are going to make it out of this kind of downturn, this somewhat recession. But we also know rent is rising. We know utility payments keep going up. And again, there's a lot of uncertainty in the world, not just here in the United States. And this is not what we want to see. This is not a good sign for our entire economy. So again, I'll keep you updated on what's going on there, but that is something that is fairly scary. But here's perhaps the biggest lie. Okay, the biggest lie that I've found from the Fed's minutes was that they said the GDP growth appeared to be rebounding after declining in the first quarter. That was word for word from their minutes. But what's crazy about this is that the Federal Reserve Bank out of Atlanta, they showed us on July 1st, and I addressed this just the other day, that in the GDP Now chart, they are projecting a 2.1% quarter loss. We're negative. So how is one branch, how is one Federal Reserve Bank, the one out of Atlanta, how are they seeing different results than what the Federal Reserve Chairman Jerome Powell is seeing? How is that the case? And again, it's crazy to me that nobody seems to be talking about the same thing. Everybody seems to be using different numbers in reference to our economy. But why? Again, it makes absolutely no sense. And that's why I look at these things. That's why, as an investor, I continue to look at the stock market. I continue to look at fundamentals. I continue to look at what the Federal Reserve's doing, what our congressmen and women are doing, what they're planning or proposing, what President Biden is doing, because all these things matter. And again, I get a lot of comments saying that, well, why are you talking about this or that? It doesn't matter. I want to know about stimulus. I want to know about stimulus payments. The problem is there's really no stimulus payments coming. It would really hurt if we continue to provide additional stimulus. But at the same time, and I get this, it's hurting the American people now by not getting the stimulus. So again, it's a double-edged sword here, and the tough part is the Federal Reserve and the Biden administration have no clue what direction to go. But now that we're talking about the direction of our economy and our nation, let's talk about why our national deficit is so scary right now. And it's because it's currently $31 trillion. That's fine. $31 trillion is fine as long as our interest rates were under 1%. But being that the Fed funds rate is now 1.7%, and you're probably thinking, well, that's still pretty good. It is, but it's not 0%. That's not what it is. That's what it was, which was great. But the Fed is trying to lower inflation, and the best way to do that is by raising rates. The problem is that they are not raising rates fast enough to get inflation under control and get it back down soon enough, at least according to multiple economists and Fed presidents. Well, it's because of this. We are likely going to see higher inflation for all of 2022 and even into 2023. But there is an alternative, and I want to explain what this is because this is where things get very scary. If the Fed decided to raise rates in a hurry, they could do this. We saw this under the former Fed chairman Paul Volcker. He did this where he raised rates. I think he jumped to like 14%. Then he pushed it all the way up to like 20% or something like that. Now, I don't see this happening for one main reason. For every percentage that we are paying, or the Fed funds rate goes up, we will pay more. We'll pay $310 billion more in interest-only payments. Think about that. The U.S. government, we don't have unlimited amounts of money. How do we fund these things? We fund it by getting taxes. We fund it by getting Social Security taxes. right? We have income taxes, right? We have corporate taxes, excise taxes, state taxes, right? I can go on and on. But those are just some of the taxes that we have. Well, think about this. Let's say the Fed decided to raise rates higher than inflation, which was actually recommended by multiple economists. Well, let's say they raise it higher than inflation. So let's say 9%. Okay. This means, again, for every 1% that the Fed raises rates, the federal funds rate, we have to pay $310 billion in addition. Okay? This is just interest. Well, if we go to 9%, this means that our interest-only payment for the U.S. government would be $2.79 trillion per year. Yeah. How crazy would that be to spend $2.79 trillion a year in interest? That is it. But consider this. You're probably thinking, oh, we make so much money. That's not a problem. Well, in 2021, the United States government brought in $4 trillion in revenue. So by bringing in $4 trillion, by just interest alone is $2.8 trillion. So we got $1.2 trillion to work with. Again, that's just interest. That doesn't even pay the payment back. That doesn't pay the money back, right? So you think these other countries are going to be like, yeah, we don't need the money. Just pay us in interest. Probably not. You think China's going to do that? No, absolutely not. So this would hurt our military funding. It would hurt all Social Security funding programs. It would hurt, Social Security, Medicare, government agencies, social spending, right? Everything would be impacted. And this is why, and I've talked about this a little bit in the past, but I've refrained from really going into this because it is scary. But this is why some are saying that the Federal Reserve could potentially be backing themselves into a corner. But the problem is, they're not telling us this. They're telling us everything's fine. They're telling us not to worry, that we are not going to head into a recession. Inflation is going to come back down. Jobs are still going to be plentiful. But is that really the case? Well, I don't know. But again, let me know your thoughts down in the comment section below. Just wanted to fill you in on what the Fed said today and why the news coming out from our national deficit is a huge concern. Again, this is a major problem. I think a lot of people are completely missing this because they're worried about just inflation in general. But again, inflation is just part of the problem. But the solution right now, nobody has an answer to. So again, that's what we know at this time. As always, as I know more, I promise I'll come back on and share all the latest news and updates. Again, just want to thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.